go ahead and do some homework problems for chapter 2. That sounds like fun to me. Does it sound like fun to you? All right, let's go into our view. I just said maybe. Okay. Remember, you got to get 80% on this to move on to do your quiz. So please make sure you do that. Also, make sure you don't waste till you're out of time and you get half points. All right, we only have about 9 problems in this assignment. I believe we only have only 5 multiple choice. Well, let me just double check that. Yeah. So 5 multiple choice. Number 6 is you're going to identify whether or not a debit will increase or decrease these accounts. This should be child's play for you at this point. Please go through those and make sure. Look, when I say that, I'm not trying to like make you feel bad or sad or anything like that. If you need remedial, you need to kind of get caught up back onto what a financial accounting is. That's fine. It's just that you should have already been exposed to this. That's what I mean by that. So please don't take offense. Okay. Following transactions occurred during the month of June. Oh, I love June. June's a good month. Okay, so we have all these individual situations. So let's go down here. Obtained a loan for $55,000 from the bank by signing a note. So we're just doing journal entries, and these are just basic journal entries. So if we got a loan, we're going to debit cash because that's what we got, and it was $55,000. And then we're going to credit a notes payable because it is a loan from the bank. Right? Record the entry. Issued common stock in exchange for $25,000 cash. We're going to debit cash. It's like we're raising a lot of capital here. We're starting up the company. All right. Purchased equipment for $60,000 cash. Man, did we have enough cash? $70,000, $80,000 cash, and we already burned through 60,000 of it. It's a lot. All right, we're going to select debit to equipment. Now, I'm going through here under the assumption that you remember what's an asset, what's a liability, what's equity, revenue, and expenses, what's their normal balances. I'm not going through that anymore. You have to know that at this point in your accounting career. So we're going to debit the equipment, credit cash, and record the entry. Purchase supplies of $6,500 on credit. Debit supplies. Accounts payable. And notice I'm just typing it in because I know what account I'm looking for. I don't need to do these drop down, but I'll do a couple with the drop down so you can see. Provided services for $3,500 to customers. All customers paid in cash. So we're going to come here and we're going to look for cash. There it is. 3,500. Whoops, one too many zeros. And then we're going to look for revenue of some kind. It could be service revenue. Let's look for service revenue. Sales service revenue. There it is. Because I think it's provided services. It's service revenue. Okay. Paid employees $750 for work performed. All right. When it says paid, it means we've issued cash. And since there are employees, we're going to be doing either salaries or wages. I'm just looking to see if wages is a thing. It doesn't look like it. So salaries probably. Salaries expense for $750, and then we're crediting cash. I really prefer my way. I really hate having to look for the account. Paid for advertising in a local newspaper costing $350. So advertising expense, $350, credit to cash. Again, if I'm going too fast, see, I don't like these videos being too long. If I'm going too fast, just pause the video. But you can in YouTube, you can slow me down to like 80% of my speed too. So I can talk like this in case you forgot. All right, we provided services, but this time it's on account. So now they owe us money. That is accounts receivable. And that was for $4,500. It's always the most. Like when you make more money, it's always to accounts receivable. I don't know why, but This is services revenue again. Paid a utility bill for $1,250 for the month. Debiting utilities expense $1,250, crediting cash for the same amount. Last paid dividends of $450 to shareholders. Wow, boy, break the bank. But nevertheless, we are going. See, here's the trick. There's a couple of things you can do. I'm going to put retained earnings. Let me just look really quick. I'm just curious because I haven't even looked into this. There's some other things that you could do that other books do. You're not doing anything to common stock. Sometimes there's like dividends. That's that. I'm curious. Let's just see because sometimes they'll say put it to dividends, but ultimately you could use dividends and then it's closed to retained earnings. But let's just see if it liked it or not. We'll find out here. Nope, it didn't like retained earnings. So it wants us to throw it into, I'm guessing, to our dividends. So let's try dividends. I mean, we're putting it to retained earnings at that point, but it's a withdrawal technically, so I get why it didn't like that. So, oh, I'm sorry, I clicked it and then quick. There we go. All right, so we're good there. Answer is complete and correct. All right, now we have some transactions again. I believe these are adjusting entries. Yes. We're assuming, all right, so we're preparing the necessary adjusting entries at December 31st, 2027 for each situation above. Assume that no financial statements were prepared during the year and no adjusting entries were recorded. So it doesn't matter at what point something here happened, we have to account for it at the year end, based on what it is. Nothing's happened. So if it says January 3rd, something happened, unless it specifically says something happened to that account throughout that, we're presuming that nothing adjusted it until the end of the year now, which is what we're doing. So let's get started on that first one. October 1st, 2027, microchip lent $98,000 to another company. So I'm guessing we're microchip. I didn't bother to look at that. Yep, we're microchip. A note was signed with principal and 9% interest to be received on September 30th, 2028. Prepare the necessary adjusting entry on December 31st, 2027. I am going to open up our good old Excel workbook here. Zoom in so we can actually see it. And it just keeps going. It's like the Energizer Bunny. All right. So we lent out $98,000. All right. So here's our principal. We want interest, maturity date. All right. We're just going to do this just so that we know. 9/30/28. Interest is 9%, and the principal is 98,000. All right. We did this on October 1st. So how many months is that from October 1st to December 31st? All of October, November, and all of December, 3 months. So what we need to do is we need to find out how much this is for either just the 3 months total that we're owed, or how much it is per month, and then multiply that by 3. I'll take the latter in that I'm going to calculate total interest. So annual interest for this note is going to be the principal times the interest rate. That represents this 88,200 8,820 represents the annual interest rate. So let's going to take this and we're going to divide that by the total number of months. Okay, it's $735 a month. Let's multiply that by the 3 months. We are owed $2,205. 2,205. Was that correct? Again, let me just double check. Oh, that was the wrong Excel workbook. I always have lots of things going on. 2205. Yeah, 2205. And then our debit will be to interest receivable. And then we're going to, sorry, my screen's kind of down a little bit there. Credit to interest revenue. let's record that entry. All right, our next situation on November 1st, 2027. So this is November, now it's December, so 2 months. The company paid its landlord $11,700 representing rent for the months of November through January, so 3 months. Prepaid rent was debited at the time of payment. We also, what else do we call this? Prepaid rent, right? Deferred expenses. So we have a deferred expense here. So let's look at this one now. Now we have 11,700. I need to do this. I just need to format the whole bloody thing. Okay. So we have $11,700. It represents 3 months. Let's find out what our monthly amount is by taking the total amount, dividing it by 3. So each month was 3,900. Well, how much of it have we used? We've used November, we've used December, 2 months. Let's multiply this number per month by 2. So our total expense, total prepaid rent for 3 months, monthly rate, rent expense for 2 months. All right, so that's what we want to label those. So we're looking for $7,800 for this one. We're going to debit rent expense for 7,800. I think I keep forgetting. It's like when you're talking and doing stuff at the same time, it's kind of challenging sometimes. We've already expensed the cash, right? We've already paid the cash, so we need to credit the prepaid rent expense or prepaid rent. Now notice we have the check my work feature, but I'm not just clicking after each one. I want to do all of these journal entries and then at the end check my work. I don't want to abuse that check my work feature. By now, depending on how you guys are doing, you may only have a certain number up here, which means that's how many number of checks you can have per question. So, you know, that's if somebody screwed it all up for everybody. So hopefully that hasn't happened. But if it has, just, you know, be judicious. On August 1st, 2027, we collected $17,700 in advance rent for 1 year. I'm guessing we're renting something out then. Deferred rent revenue was credited. This is also known as unearned rent revenue, okay? Credited for the entire amount. Prepare the necessary adjusting entry on December 31st, 2027. So this $17,700 represents 1 year. Let's go back to our awesome Excel spreadsheet. 17,700, 1 year's worth of rent. This is August 1st, so August, September, October, November, December, 5 months. We got to find out what the monthly rate is. Okay. And again, so number of months is August, September, October, November, December, 5 months. So our total rent revenue is going to be $7,375. Remember to put the number down first this time. And then we're going to credit rent revenue. What? Why did it say deferred? And then this is going to be, oh, this one's deferred rent revenue. There we go. We're debiting the, see, this could easily have just said prepaid rent, or not prepaid, sorry, unearned rent. Get your, you know, from our accounting 111. If these deferred and accrual stuff, you know, takes you time to process, it's okay. It still takes me some time to process. I still have to really think, okay, what is it saying? Because what it's doing, deferral and accrual, oh, I'm sorry, not accrual, deferral and just blanked. The other one, deferral. There we go. Let's just look at the transaction list. Deferral and I keep saying deferral and I can't remember what the redo was the other one. All right, let's view the general journals, what I wanted to do. Oh, it says deferred and accrued. Sorry. Oh, glorious. Okay. Deferral and accrued. Okay. It's telling you based on how the transition from cash to accrual basis, which is why I hate that. My brain just functions in accrual now. I don't even like cash per se, but anyway, that's why I struggle with those concepts. I like saying prepaid, and I think it's just clearer that way. But okay, depreciation on office equipment is 6,000 for us. So we don't have to calculate depreciation. So we're going to debit depreciation expense. This one's too easy. Hopefully, it just tells us what it is, and then we're going to do accumulated depreciation. Just there's nothing there. I mean, if you had several accounts of depreciation, you would identify this as office equipment. Maybe you have vehicles or something else, but in this case, we just need to put that. Vacation pay for the year that had been earned by employees but not paid to them or recorded is 9,900. The company records vacation pay as salaries expense. Prepare the necessary adjusting entry as of December 31st, 2027. So this is basically whatever is owed to these employees. So think about it, if you have a job that gives you vacation time and you don't use it as of December 31st, and then it's January 1st. Well, you gotta expense that because that's when the employees have technically earned it, or you have to pay it out. You owe it. So you got to throw this here in the journal. It has a debit to, you know what? I don't know. Maybe it's vacation pay expense, vacation expense. Oh no, it said a salaries expense. Okay, salaries expense, and we're gonna put 9,900. I wonder, nothing vacation. So let's do salaries payable then. Okay. I would, as a matter of a company, would want that separate because you don't want it make it look like you're constantly owing people for work that they've done and you owe it to them. You'd have to explain that. It might get a little messy. I would just have a food vacation uh, account showing how much you owe them for vacation pay. Microchip began the year with $3,900 in its asset account. Supplies. Oh, I'll bet you we're gonna need a T account for this one. This one's exciting. Okay, let's put up a T account. Ooh, actually, I'll probably need to make this bigger because I don't know where they put probably under alignment. It makes no sense to put it there. That's why I thought they put it there. Here we go. Okay, so we're gonna go left and then, sorry, hear me narrate. We play games at my house, and sometimes I can't handle when my children are, and then I'm gonna get the dice and roll the dice, and now I'm going to do this. Sometimes it drives me nuts, and here I am doing it. All right, Microchip began the year with $3,900 in its asset of account of supplies. So let's throw in that. During the year, 8,400 supplies were purchased, so we're going to debit that. At year end, the supplies costing 4,200 remained on hand. So we got to find out how much we used. All right, so the amount balance we have left is $4,200. Well, we're going to add up our beginning balance plus our purchases and subtract out our ending inventory to find out what our used inventory or supplies were. That's $8,100, $8,100. All right, let's record that entry, and I think we are done. Oh, that's depreciation expense, dadgummit. I don't know how I missed that. Hope some of you are freaking out. Brian, that's not right. Brian, don't do it. I think I want to watch this again because I thought for sure I selected depreciation expense, but ooh, well, there's your adjusting journal entries. Too fun, right? I had a blast. Last one. This is so much fun. I hope you guys love this as much as I do. For the income statement and classified balance sheet and necessary closing entries. Oh my gosh, this is so much fun. I love it. Okay. So let's do the income statement. They even did our headers for us. Well, hopefully you know that we're dealing with revenues. So let's see if we have just the category revenues or if we're just going to indicate what revenues we have. No categories. All right, so let's find out what revenues we have. We have sales revenue, that's it, of 6,800. 6,800. I'm sorry, $680,000. Service revenue. Do we have cost of goods sold? We sure do. 408,000. That's gonna be here. And then here we're going to have our gross profit. It's not that gross. Just kidding. All right, so we've hit our first two here. Remember, this is our trial balance. We start off with revenues and our work our way down with all these expenses. Then we're going to look at our statement of stockholders' equity. Even though we don't have to make it, we need to do it mathematically to find out what our balance sheet accounts are going to look like. And then all the rest of these are balance sheet accounts. And we're just going to throw those on the balance sheet with whatever our ending balance in our retained earnings is. So let's look at our expenses. We have salaries, rent. Let's just do that. Salaries, rent, depreciation. Remember, it's depreciation expense, not accumulated depreciation. Interest and advertising. And look at that. They left us a little spot here. Okay, so don't get blown off by that or thrown off by this. They do that on purpose. I want to make sure you know it. So we have 102, 27. These are mine. 53 to, well, let's do 53. 2,600 and then 3,600. So those are our total expenses. So our, you know what, or they want to call it net income, or they want this operating income? I'm thinking they want operating income. Then we're going to have other expenses. Do we have other expenses? I don't see any. Unless it says it here, I don't see any. Oh, they got me interest expense. I wonder if that's supposed to be down here. This is net income. I'm wondering if I'd put interest expense, just turning my brain off. I think it's supposed to be down there. All right, let's give that a shot. Let's check this one out. I mean, it's going to balance because either way, we're still subtracting it. Let me go back. Yeah, we need to show this as, no, I guess not. I thought we had to show this as, it's definitely subtracting it. What if I put a negative in there? I wonder, I think I remember, right? You're supposed to show that as a negative number. So put a negative there. Well, we'll see. I'll check the work too. All right, balance sheet. So now what we need to do is we need to take our net income over here. I'm going to pull up our I keep saying calculator, but I want my thing here. So net income. All right. So our retained earnings is going to be our beginning balance plus any stock. Net income minus any dividends. That'll be our ending balance. So we have our net income of 83,800. Let's find out what we got up here. It says retained earnings. I don't know, beginning balance. Let's just do that. 115,000 for me. I don't see anything we have. That's common stock. I don't see any other additional information telling us something else. I mean, this is meant to just be a refresher kind of a thing. So no dividends that I see. So let's just add these together. I'm going to just do the math anyway, just so that if I need to come back, I can do it. So we got 198,800. So let's now do the balance sheet. All we're doing now is we're going to take all these remaining accounts. We just used our retained earnings and our we haven't done common stock yet. Common stock will go into the, here, watch this. We'll just do this common stock here. And then retained earnings. And let's just throw the retained earnings in there now since we're here. 198, 800. Remember, these columns are not debit and credit. It's just their balances. We don't put debit and credit on the balance sheet. Nobody understands it the way we do. All right. So there's our comments. Our equity is done. So let's just list the rest of these. Let's start with cash, accounts receivable. This is the classified balance sheet. So we got to do current assets. Cash, accounts receivable. What else? Let's see what else. Prepaid rent, inventory, office equipment. Boom, that's where we stop. Okay. So inventories, we need to put prepaid rent, inventory. Those balances there, 51.9 for cash. And then 290,000 for accounts receivable. That's a lot of accounts receivable. I don't know. What was their revenue again? That much, 680,000. Gosh, dang it, $680,000. That's like 1/3 of your revenues are accounts receivable. That's probably actually pushing 3.6. Yeah, no, that's more than that. That's almost pushing 40,000 or 40%. That's a problem. See, that's kind of what you should be able to start looking at is you see a number and you're like, it kind of feels weird. And you look around and you're like, yeah, that is weird. That's kind of how you want to start looking at accounting, so that you're able to identify things like that. It's what our role is really is to analyze these numbers and be like, hey, this is kind of a problem here. We got to see what's going wrong with this. All right, so then our next asset is going to be equipment. Where are you? Equipment. Right, what was it again? I swear I thought it was equipment. Oh, office equipment. Sorry, office equipment. And then we're going to have accumulated depreciation for that office equipment. We're going to show that as a negative number here, even though it's a credit, but 530 and then 222. So we got 530 and then 222. All right, so our total assets are $701,900. Here's hoping our liabilities and equity equal that. So here's our liabilities. We've got accounts payable, notes payable that is due in 6 months, right? That means it's a current, even though it's a note. So accounts, notes, salaries, and interest. Accounts, notes, salaries, and interest. All right, accounts payable is, so you notice that's kind of how I do that, trying to remember what numbers need to, or what accounts need to go down there. Whatever works for you. Some people take a picture of this and have it on their phone while they scroll and do that. That's probably easier. I'm doing it like this just so that you can see what I'm doing, even though I probably am too fast. I probably should learn to slow down. I apologize if you guys say I'm too fast. I get excited. I like doing this. But anyway, accounts payable is 56. Notes payable is 39. So 56,000, 39,000. You know, I'm going to check notes payable and just see if there's anything related to the short-term aspect of it. If there's something there, there's not. Sometimes there could be. Okay. 6,008 and 1,003. 6,008, 1,300. 701,900. 701,900. Oh, I started to get worried there. All right, we're balancing. That's good. That's good. Notice we didn't fill up all the lines. Okay, doesn't have to do that. Now let's check our work. Let's see if I did that income statement correct. I do recall that we are not done. We have that third or that second requirement. Service revenue. What did I do wrong there? Sales revenue. That's why I was wondering when I said service revenue and then cost of goods sold. Yeah, our interest expense needs to be a negative here as other expenses. You know, I teach a lot of 111 where we really don't break this out, and so coming into intermediate accounting, sometimes I'm going to make some little mistakes like that, thinking it's not that we taught you wrong. It's just that we weren't trying to make you do everything perfectly correct in every aspect in accounting 111. We're just introducing stuff to you, but now we're we're going to pull that interest expense out because it's technically not something that is an operating activity. So we want to pull that out and have that as something that's an other expense. There's also other incomes and things like that. But anyway, so we got to fix that from service revenue to sales revenue. And hopefully you guys caught that when I did this. And I leave these errors in here just so you can watch it. You know, hey, even I make mistakes, but that's why that check my work feature is there. And again, hopefully you're not, your group's not abusing it. So we're going to do sales revenue instead there. And then let's go to requirement 2. And what's that got for us? Closing entries. Let's close the revenue account. All right, so we're going to debit sales revenue. I remembered that because I just screwed it up. And then we're going to credit our income summary. All right, we're not doing income summary, so we're going to close that to the retained earnings since we were getting rid of the income summary account. Retained earnings. Let's see. Retained earnings. No, we want sales revenue 680,000. All right, that's fun. Record that entry and then record we close the expense accounts. And we're going to record every one, even that interest expense. So we're going to do cost of goods sold on down. So man, I wish I could just, you know what? Maybe I'll, no, I got to do it. Cost of goods sold is 408,000. Let's just do this. Oh, wait, no, we got to debit retained earnings. And then we're going to find out how much that is. Cost of goods sold. Let's just do that. Cost of goods sold, salaries, rent. I think the next one was depreciation, interest. See, I'm remembering them now. Advertising. Yeah, advertising. All right, let's get those numbers now. Cost of goods sold is 408,000. Salaries 102,000. Rent expense 27,000 and depreciation expense was 53. So 2753. 27,000, 53,000. Interest expense was 22.6 and 3.6. So interest expense was 2,600 and advertising expense was 3,600. Let's go ahead and add those up. You're welcome to use a calculator. I find that doing Excel is just so much more safe. Okay. So 408, 102, 27, 53, 2.6, 3.6. So we got 595,900. 595. And you might see how I'm doing the math and how I'm kind of abbreviating and dropping the 3 zeros. These are test taking skills that you'll want to learn, especially if your plan is to take the CPA exam, because you only have so much time on the CPA exam. And typing in all those zeros all the time kind of makes it to where you might end up running out of time. Now, I think I never ran out of time on the CPA exam, but there were a couple exams that I was right up to the end. And maybe you're not worried about taking the CPA exam, but you are taking this class, which does have exams. Maybe you're taking math classes, which does have exams. Learning these kind of skills that make things go faster will be very beneficial to you going forward, so to make sure that you are saving your time and gives you all the time that you're going to need. Okay. I must have done some math incorrect. You know, all we got to do is just come back over here and find out what our expenses were. Oh my gosh, I must have typed in something really wonky. So let's look. I'm really curious, really quick. Let me get my calculator this time. So our total operating expenses. So our number actually should have been 150. Whoops, 180. Come on, 185.6 plus 2.6 plus I got to add in the cost of goods sold. So 596.2. Let's see if I didn't do that or something. 596.2. So I did something wrong over here. I have to find out what I did wrong here. 408, 102, 27, 53, 2.6, 3.3. Ah. So 596.2 is what it should have been. So you see how the check my work feature should be used. The idea is that we're able to fix things, not to just we're uncertain the entire time and have to check. So 596.2. Oops, not 0.2. Yeah, you gotta watch out if you're doing it my method then. All right, then you gotta click it just so that you can see that beautiful answer is complete and correct. Okay, so there's your chapter 2 homework assignment. Again, your numbers are different, so I hope that helps. I hope you enjoy these videos. Hopefully they will save you in the long run. But anyway, you have a good one, and we'll see you in chapter 3 or whenever we see you.